Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing quite strong monthly demand and support. In fact, what we know is that every time that the market tested this zone, it got rejected to the upside quite aggressively, confirming this area as strong historical support. And what we know is that the market has just tested this level once again, from which more bullish price action could be expected, as happened in the past all these times. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, what we must notice is that even though the monthly is quite bullish, the weekly does have resistance at this zone. In fact, from here, the market created this red candle and a rejection to the upside. So this is now previous weekly support, which is now turned resistance. And we can see how the market has already started respecting this area as resistance and currently rejecting it to the downside. So what we need in order for the weekly time frame to be aligned with what we have on the monthly, therefore to have a bullish weekly time frame, as the monthly time frame is already bullish, is a break above this resistance. Because if we get a break above this resistance, this previous resistance would become support, and at that point more bullish continuation would become very likely. Going down on the daily time frame, what do we have? Now here on the daily, this is where things get quite interesting. First of all, we can see how we had a very strong impulse and then the start of this complex correction. Now, generally speaking, if you have an impulse and you want to measure a correction, you have to take your Fibonacci from the low to the high of the impulse leg. And this shows us how the market has already retraced to the 0.618 retracement. Therefore, the golden ratio tested it very precisely, started rejecting it to the upside. And from here, it seems like more potential bullish price action is definitely a possibility, breaking above that weekly resistance and rejecting the monthly support that we have identified at the beginning of the video. Now, I did speak about EURUSD also quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move higher. Again, after the creation of this correction, when the market was at this level, I explained all the reasons for which we could expect the creation of a higher high. And the very last analysis, when the market was around this area, I explained all the reasons for which we could expect this rejection to the upside, correction, and higher high. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. Now, at the moment, what we must notice is that as the market is creating this complex correction, we still must remember that we are below that weekly resistance, which is at this area. Only if we get a break above that weekly resistance, only at that point, all the time frames would be aligning for a potential move higher. And after the break on the retest of that previous resistance turn support, this is where we would have very good probabilities to see more institutional longing inside of this area, further pushing the price higher. Now, if we go and see what we have when it comes to the commitment of traders, so what institutions are doing in the market, and we look at the net positions for the euro, we can see how lately in the long term they were getting decreased, going from 187k down to 144k. However, this is the first time that once again we start to see net positions getting increased And it is also important to keep in mind that in the long term, we had an increase. In fact, we went from the low at 122K net positions up to 145K net positions. So in the short term, net positions are once again starting to get increased, and in the long term, they were already getting increased. This means that if the market will manage to break above this resistance, if we get the break on the retest, this could be a very interesting area, inside of which we could see more institutional longing, further increasing the probabilities of seeing bullish continuation away from this area. So until the market will remain below this resistance, it could easily melt lower. But if we get the break on the retest of the previous resistance turn support, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program directly from your student dashboard, you open an account with them, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in description at transparentfxtrading.com. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.